All right, folks, this is going to be another video on market structure, and this is going to be a very interesting video. I'm going to actually post up an original recording of a session I took with my mentor Wakar some time ago in reference to understanding market structure a bit better. And what's interesting about this is that it's taught quite differently. The understanding is quite different than what I'm used to hearing and what I was even doing myself. And so once I learned this method and understood the relationship of market structure inside of that, what's going on in the market, it just really just took my understanding as well as my trading to a different level. So this is what we're going to discuss here today. And this is something that I think is very, very important because it's really going to determine really how well you trade. And it doesn't make a difference whether you're trading harmonics or whatever it is that you're trading. Understanding these basic principles here that I'm about to go over is going to really, like I said, just level up your trading when it comes to market structure. So I'm going to give you some examples of things that I've seen in the market, and I've always thought that why I see this particular chart pattern and it did completely the opposite of what it was supposed to do according to what I was taught. But then once I understood the relationship of what was really going on, I was able to see really what's really going on, so to speak. So what the first thing we need to identify, I know before we spoke about market structure and things of this nature where, you know, you're marking up your charts, you have your high lows and things like that, and you know you're drawing your lines here, you're drawing it here. This is your level of support, your resistance, and so forth. And that's true. That's all well and true. This is market structure. But let's understand exactly what market structure is. So, true, valid market structure. So we're thinking about market structure. And remember, market structure is what we all should be trading. So market structure is either bearish or it's bullish. So sometimes someone asks me, well, how do I know if I'm in a uptrend, or how do I know if I'm in a downtrend? So just remember this here. Valid market structure. It creates, I'm going to say we're going to do an uptrend right now. It's going to create a lower high and also a higher high. That is a valid market structure, meaning that, let's just do the bearish one as well. A bearish one is going to create a higher low and then a lower low. If it does not create these two things, it is not a valid market structure. Again, a valid market structure will create, in an uptrend, a lower high followed by a higher high. In a bearish trend, it's going to create a higher low followed by a lower low. And this is what it's going to look like. So let's say we're going to an uptrend. You have your initial low, rises, comes down, 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 rises, comes down. You see that. Let me just uh-oh, I keep that up there. Let's just mark this off again. Again, market structure. Low, high, lower high, higher high. Lower high, higher high. Lower high, higher high. What are we creating? Right here is a lower high, followed by a higher high. You see that? This is a valid market structure impulse leg, a wave movement, raw market movement, market flow. You understand? So this leg here, because it broke here, for one, it shows that it broke at high and created a higher high. So it made a higher low, a lower high, followed by a higher high. It then retraced back and created another lower high. Actually, sorry, I get confused. It created another higher low, followed by a higher high. right? It broke this market structure level. Then it came back down, created another higher low, followed by another higher high. So what this impulses leg is doing, what this major market structure is doing, it is creating higher lows followed by higher highs. Higher lows followed by higher highs. Higher lows followed by higher highs. And while it's doing that, it's breaking structure, previous structure. Hope you guys follow me. You follow me? Okay. So we have that understanding. So now we need to understand there's a difference between something called market structure, major market structure. I'm going to say it like that. Major market structure, or something I like to call minor market structure. Can't write this thing. Minor market structure, otherwise known as variations. Now, you may be saying, well, what's a variation? I'm going to write this down. I'm writing with this computer, so this is why this looks all messed up and so forth. So just understand this. I'm going to actually write it down for you. I'm going to show it to you in the charts. So let's say we're in an uptrend right now, right? Up, high, low, high, 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 low, high, 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 low, high, high. Get this out of the way here. High, low, high, 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 low. Now, look at this, what happened here. What trend are we in? Okay, what happened here? Well, we broke structure. We came down, we came up, we retested, we came up. We didn't make a higher high here. But we came down and we broke structure, broke this level of structure. We came back and we made a low high. High, low, 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 high, and so forth. So then we begin to think structure has been broken. We're now currently in a downtrend. Are we in a downtrend? Is all of this here a downtrend? Well, let's just say, let's do this. How about, is all of this a downtrend? You broke structure. You're creating high lows, low highs rather, and low lows, low high, low low. And didn't I just say that that's what creates a trend? That's what creates structure? That's interesting. This is where people get confused at. This is where I used to get confused at. Remember, there is major market structure. And where do you find major market structure? Well, it kind of depends on where you want to trade at. The higher the time frame, the stronger the trend. But also, the higher the time frame. So let's say this right here is an H4, right? This could be H4. Within H4, you usually have between, let's say, 70 and 150 pips between the higher lows and the higher highs. This area here can range between 150 pips, 70 to 150 pips, right? But if I'm on a daily time frame, it may look something like this, right? So this looks a little bit more sloppy, right? There's a lot going on, right? And this one looks very clear. So how I've learned, and how maybe you'd like to take on this education here, is you want to look for some clear market structure. You don't want to be trying to find out market structure when it's looking like this. It's going to be very hard to see where your higher lows and higher highs are and so forth. Plus, there's a lot of minor market structure that's going on inside there. So you want to find something that's very clear. You know, from this end, you can see it, right? So from a daily perspective, you would change this. And this can actually be on the H4 as well. This could be on the H1. Wherever it is that you find clear market structure, this is where you're going to mark your market structure at. So let's say this is H4, this is the daily. That's the only difference. The difference between the daily and this H4 is that sometimes between this point and this point, can be like 200 pips, 200 to 300 pips. And most likely, most of us, unless you're a swing trader, don't like to wait for a day, couple of days, 200, 300 pips before they begin to think about entering into the market. This right here could be, 200, 300 pips before before price even gets down here, before you start thinking about getting into the market. When all the time you can be getting into the market all the way here and so forth. That's just another story. So let's get rid of all this right here. So again, let's go back and look over here. Remember why I said that major market structure, a valid market structure, has to create higher lows and higher highs. And we're talking about a bullish market has to create higher lows and higher highs for the structure to be valid. So that makes this valid. That makes this valid. That makes this valid because it broke, right? It's creating higher lows and higher highs, right? So which is the last previous valid market structure in this bullish trend? It would be this one right here. This is the last move that created a higher low and a higher high, right? And we are in a bullish market. So no matter what price does here, even though it breaks market structure, this is just a variation or something considered to be minor structure within the major structure. So understand the relationship between the variation or minor structure within major structure. So as long as you know, as long as you remember that you are in a bullish market, you are making higher lows and higher highs. So it is only until a previous major market structure leg, impulse leg, whatever you want to call it, is broken, that trend has been truly breached or violated. So what does that mean? That we are still in a bullish market as long as this higher low has not been broken. So right there. So price can do whatever it wants to do, as it's within this here. Is if it comes down to here and it doesn't break it and start to go up again, it's continuing its trend. It's not going back into the trend. It's always been in the trend. It just gave you some variation. So yes, you can trade this counter trend trade. Yes, you can trade the variation of it. Yes, but as long as you remember what type of structure you are in, what's your trading plan? What are you trading? If you've been trading with the trend, then you will continue trading with the trend until a higher low that has created a higher high has been broken. So how do you know when to get back into the market? Okay, I understand. I'm in a bullish market. We've been creating lower highs and lower lows. The same concept, the same principle runs true there. Once the variation breaks back into a bullish variation, that's when you get back into the market. So we've come back down. We have created low. It's very simple. It's very simple. It's basically the same thing that happens in a major market structure that happens in the variation or in the minor structure. So you've come down, you've came up, you've created a lower, a higher low. You've broken it with a higher high, right there, right? And then you come back down to retrace again, retesting newfound support, market structure, create another higher low. And this is where you enter the market. Now, this is, if you understand the relationship here between these two, it's going to take your trading to a whole nother level. You're going to understand what's going on in the market. You're not going to be really tricked, because it can be tricky. What's all this going on here? I thought we was in an uptrend, but all of a sudden we start going in a downtrend. Ask yourself, did we really start going into a downtrend? Or is this just variation of what's going on within the major market structure? See, if you understand the principles and the basics, you stay with it. And remember it, even when things are going on, you have your charts marked off. And that's why some people, they mark off these areas here. And they call it, oh, it's ranging. Yeah, you can call it a range if you want to. A lot goes on within the range, but just kind of understand it in a certain manner. And yes, you can, like I said, you can trade this as well, but just understand that if you're in a buy trade, you think it's going to go up and then went down, and you do understand this, you're going to end up with some drawdown until it actually goes back up. If it goes back up, because it very well could break the structure and continue going down. Very well can happen. So that's why before you get back into the trade, you make sure that even within its variation or minor structure, that it does create a bullish variation right there. It's created higher low, higher high, higher low. We are now back into its original trend, and so forth and so on. Now here's the question of here. Which leg has created the new market structure? I'm going to let you sit for a couple of seconds to see that, to understand that. Remember, market structure, a valid market structure has to create, we're talking about a bullish trend, it has to create a higher low followed by a higher high. So now, out of all these here, which one has created the new market structure, the new major market structure? Okay, I'm going to tell you which one it is. Hope you guys got the right one. If this was the original market structure, right, we needed something that was going to have to break this here, right? So that means that it was this higher high, higher low, followed by this higher high. That is the new market structure, the new major market structure. Most likely this would have been all the way up here or something like that. So this would have been the impulse leg. So we have all this going on here. This right here, it kind of doesn't even count. And then you have this one move right here that has created the new market structure. And this is again within this range. If price begins to do a little variation, it can either break out or it can break this major structure here and begin going to a downtrend. So I hope that you understand exactly what it is that I said, what's going on with structure. So I want you to think about it again. I'm not going to try to make this video long. I'm trying to keep everything very, very simple. If you understand principles, what is a principle? There's a difference between a principle and a law. Now, a lot of us think in laws. Oh, you didn't tell me this, and well, you told me this was supposed to happen and didn't happen, because you're thinking in terms of laws instead of principles. If you understand that all laws, the foundation of all laws are based on principles, and what principles are, they're just fundamental truths. They stand the test of time. They're timeless. Doesn't make a difference. You can apply principles to almost any circumstance. Matter of fact, you can apply principles to all circumstances. Laws are put in place for specific reasons. When those reasons no longer exist, there's no need for the law. But the principles will stand its test of time. I'm just going to give you this quick example so you can kind of get a concept of what I'm saying. Let's say you're standing in front of a microphone and the law says, don't touch the microphone. Okay, you're not touching the microphone, but you get real close to the microphone, you start playing around it, and you know, oh, I can almost touch the microphone, and somebody comes and kind of bumps you. Boom, you touch the microphone. Now you've really broken the law. But before you broke the law, you broke all the principles around the law that caused you to break the law in the first place. Had you not even been close to the microphone, you probably wouldn't have broken the law, because you wouldn't have touched it if somebody bumped into you. You understand what I'm saying? So you broke the principles around it. So understanding the principles or the relationship between major market structure and the minor market structure, the variations that happen within it, you'll be able to understand what's going on and what's going to happen. So one more time, on the bullish trend, higher high, a low, high, higher low, higher high, higher low, higher high, higher low, higher high. Break, making low highs, coming down. We're doing this. And all of a sudden it does this. Understand what's going on. Remember, major market structure creates, a valid market structure creates a higher low followed by a higher high. Right? A higher low Get in your mind, followed by a higher high. If you do not have these two things, it is not a valid market structure, right? This is a higher high. So what happened? Price came down, broke structure. Okay, we're going into a downtrend. Are you going into a downtrend? This is your market structure. You are in a bullish trend. Remember that. I am in a bullish trend. So on your charts, when you see this and you start seeing variations and minor structures breaking things and creating lower lows and lower highs and things of that nature, find your major market structure. Find this area here. Mark it off. Fine. You want to trade this? That's all well and good. If it does not break this, understand you are still in a bullish trend. And if you want to catch the move, by all means, what are you looking for? You're looking for a break, back into the bullish trend. And when you get back into the bullish trend, this minor structure or variation creates a bullish structure or bullish variation. So it comes down, does what it has to do, then it breaks and does the same thing from a major standpoint, but on a minor standpoint. Comes down, creates a high and low. There you go. You can get in here, or you can get in here and go back into the trend. It's simple. It's easy. Just think in simple terms. Think in simple terms. Don't tell yourself it's complicated, I don't know what's up, because whatever you tell yourself, you are correct. Whatever you believe, you're going to be right. Your brain is the computer. It believes what you tell it. So you have to tell yourself, this is simple. And then your brain will begin to grasp and see these simple things. So just understand. If you have any questions, feel free to, hit me up. I'll be happy to walk you through it. And we're going to look at a chart to see this as well. But I want you to be able to understand this and be able to look at this and draw this on your charts. Whether it's boxes, whether it's the little circle, whatever, draw it out in your charts. Make sure you're identifying your major market structure. Make sure it's something that's clear. If you're on the H1 time frame, maybe you need to go to an H4 time frame to understand the structure that you're going to be in. If you are trading from a daily perspective, or maybe H4 perspective, you have to go to the daily and so forth and so on. Just understand a major market structure. When you start getting into higher time frames, those market structures is going to be much more clearer, but it's going to be a lot more pips involved and a lot more time that it takes to get there. So just be mindful of that. And like I said, depending on how you're going to trade, but I will be going into harmonics. That's something different. But just understand that. So these are some basic things that you would definitely have to know. The overall intention of the price, and that's what this is. This is what I call, again, this is your major structure, but you see the overall intention of the price. Understand that. Well, I'm in a bullish trend, so that means the intention of my price is to go up. And until it breaks my major structure, the intention has not changed. Principle, you understand? My intention has not changed. So even though I see it doing something else, you understand that the intention is to go up. So basically what's going on is the banks, the institutions, the hedge funds, all the big money, they're gathering liquidity here. They're gathering all the money here. The retail traders, oh, we're in a downtrend. No, grab them here, whatever. And then it shows its true intention. It goes right back up. And so it has not only has trapped a lot of people, they're either going to be holding to wait for it to come back down. They either blew their accounts or whatever. They've got people where they want them at. So understand what's really going on inside the market there. Once you understand the intention of the price. Remember, you will want to be trading the major market structure. Wherever you're going to find that at. You're going to find it from a 1 hour perspective and you're trading on the 30 minute, 15 minute. Find what the structure is. Okay, and I'm sure you already understand that inside, let's say a daily candle, if you go down to the H4, it's 6 candles. The previous 6 candles are going to tell you what happened during that day and so forth and so on. So down to an hour, 50 minutes, 30 minutes, or whatever, it's all what's happening within the daily candle. So that's a whole different video as well. I'd like to just go on and on when I talk about trading and so forth. So just bear with me sometime I rant. But I want to keep you caught here on this. All right. So hopefully you got all that. And maybe what I'll do now is I will share. Let's see, get my screen. let's go into a chart here. We're going to start with the dailies. Let's use daily here. Now, before the market structure, I was talking about, yeah, you know, remember how you see the charts. Of course, that has not changed. How you're looking at charts, you're still looking at charts and moves and waves and things of that nature, right? That's all one good. We're not going to go over that again. You want to go back over that, go back into the other previous video. Okay, so you want to say, well, what kind of trend am I in? What am I creating? It looks kind of, this is actually a week. Let's go into a daily. Now, you see the difference between a daily and a weekly? All right, this is a daily. Look at this daily right here. And let's go into a weekly. It's less going on, right? Less going on. Each candle is weekly, is a week. So, and then here, each candle in a day. So you see there's a lot more candles going on. But again, when I say you want to see clear structure, this is what I'm talking about. All right, here's your initial low right here, right? All right. You create a high, high, low, high, high. You see how it has broken, right? It has broken previous structure. That's a valid point of structure. Now we come down, it's created another higher low. It has broken this structure. So this is a valid market structure impulse leg. We've come down, create high, 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 low. And you see how it come down and has retested? And now we're here. We have broken this level. We've come down here. Now we're not always going to come down. It usually does come back down to an area of structure here. It did not this time. No biggie. But we still have broken it, right? We come down, create another high, low, high, high, broken. And technically, you know, this is very, very small variations. So what I'm going to do, I'm going to make this leg here. Okay? Because within major moves, there are variations of impulse legs. So I'm not going to go through all of them. So again, we have it broken here. We actually have some that's broken here as well. If you want to use that one. Okay? High, low, high, high. Then what happens? Comes down here. High, high. High, low, rather. Uh-oh. What is this? Lower high. Breaking structure. Now here is it on the charts. Where is the market structure? The market structure is here. Let me see if I can. There's like a thing I can draw with somewhere around here. I don't really use it too much. I think it's called the brush. All right, let me just forget about it. This is your market structure here. Let me use this box. I don't like the box either. Anyway, I'm going to, my mouse, I'm going to use, look at if you can, hopefully you can see this here. You see this because this higher low has created a higher high. So this is my original structure right here. We have come down, we created another high low, and then we created a lower high. And then we broke this higher low here. And we came down, and basically what we did was we just pretty much retested. So, are we? Did we go into a downtrend? Did we? Possibly. Very possible. Could be. Is that what we're? Is that where we're headed? Is it possible? Not possible. It didn't break. It didn't break the high low. This was the major market structure. It didn't break the more higher low. It just came down to retest it. But what did it do? It created another lower high. This is where sometimes people get confused. This is where I used to get confused at. It's like, okay, so what's going on? And then we come back down and then we break it. Now we've broken market structure. So now you're saying, okay, so now we're going into a downtrend. You very well could be going into a downtrend. You have broken market structure. You have major market structure. You have broken it. But what does price do? It comes back up and it creates a higher high, and it breaks this structure here. Okay, and it comes down and creates a higher low. All right, I think we're going back into an uptrend. Very possible. What does it do? You know for sure it is confirmed. You have broken this previous high and it has created another high low. So the intention is clear. This was tricky though, wasn't it? Because not only did you break major market structure here, let's see, let me get a little bit more simpler. I want to look at this. In order for you to know that you was going to be going into a downtrend, to be honest with you, you broke the market structure here. It has to create the two things. Did it create the two things? It did not. It actually violated it. Because if we're going into a downtrend, we would have to create a higher low, we'll create a lower low. And what did it do? It did not create a higher low, it created a higher high. It violated here. So we would have to stop somewhere here, up under here, if not to retest or somewhere up under, creating a higher low, which would have validated this move here, and then drop there. And we would have had a confirmed going into a downtrend. But that's not what happened. What happened was it came down, it did break the structure, and instead of creating a higher low, it created a higher high, and it violated its previous high. And then it came back down and created a higher low. So it's something that I know I had to do, and something that you guys could do as well. Study. Understand the principle and the relationship of it. Okay? So now we're going to continue back up. Right? So now we have, let's say this move here. I'm going to give little small ones. And this one here. And this one. And this one. And this one. And this one. Uh-oh. Where are we? First of all, what trend are we in? Still in the bullish trend? Absolutely. What's the major market structured move? It's going to be this one here. It's going to be this one here. I'm using this because that's the ultimate high. Even though we have this back here, it's the ultimate high, right? So this is the major market structure. It's created a higher low and it's created a higher high. It has come back down to retest this area. Has not broken it. We are still in an uptrend. Then it went up and created a higher low. Okay. What are we looking for? Are we into a downtrend? We'll see. If it breaks down here and then gives me a lower high, a high low, and come down, yes, we are. But it doesn't. Comes down and gives me a higher low. Well, what's going on? Then it gives me a high low, then it gives me a lower high, another lower high. What am I waiting for? What is price going to do? I'm still looking for it to go in its uptrend, but it's showing signs that the momentum has been lost, right? I mean, it's still kind of creating higher lows, but it's also creating lower highs. So to be conservative is what they say. You want to wait, and you see it break its structure. And once it retests and gives you the low high and the lower lows, you know you're in a confirmed downtrend. And not only that, you see it breaks structure. That's one move right there. Come down here. It's breaking this impulse leg as well. Now right here is where we're sitting at. But you already know you're in a confirmed downtrend right now. So really, until price starts doing something showing it's in an uptrend, coming down, creating higher lows, followed by higher highs, which it's not doing just yet, although you have broken here. You see that? Now, if price comes here, there we go. We have a variation change. The because the structure is now bearish. This is your bearish structure right here. So what you're looking for is price to break this area here. Let's change that to red. You're looking for price to break this area here, because this is the impulse leg, right? This area here. Call the range, call what you want. So you can begin to go bullish as long as you want to. But as long as it doesn't break this impulse leg, you are still in a down trend. Understand that. Even though you have started to rise, you are in a bullish variation. You are in bullish minor structure. Your major structure is very bearish. You understand that? Can you see that? And that's why you'll see somebody put fibs from here to here. And they're going to see where price is going to retrace. Because really, all of this is nothing but a retracement. Unless price begins to come up here and start doing things like this. Once it starts playing around above this area here, you are bullish. You are no longer bearish. But until price breaks this area and comes around this area here, you're still in a bearish market. If you can understand that relationship. You understand the relationship now between the bearish, the bullish market structure, and the variations within? So again, price can very well let's go back to the pink. Come down here, come up, come down, come up. Now the question is, how do you get back in on this downtrend? Easily, the same way you get in on an uptrend. Even though you're in a bullish variation, once you see the variation, the minor structure being broken, and it's creating low lows and low highs, you would get in right there. And this is how you minimize drawdown. You minimize your risk. You're waiting for the variation or the minor structure to change, showing its intention to continue in its original trend, which would be, in this case, the downtrend. So I hope you guys understand this. Think about it. Go on the charts, mark it up, find your major structure, whether it's a daily chart or whether it's a 4-hour chart. So let me just do this here. I'm going to remove all this stuff here since this is a daily chart. And so we're going to say that this is our major market structure, right? Right? That's our major market structure right there. And this is the leg. This is the leg right here. That's the one leg right here. It has not been breached. In fact, it's closing high, it's doing higher highs, high lows. So now, well, okay, well, how do I get in? It's a daily time frame. I don't want to wait days. Well, then you can go down to H4 or an H1. Let's go down to H1. And we're going to find this. Now, remember, you're in a downtrend, right? It's already been confirmed. It's just one leg right here. How would you get in? Right here. This is where I would get in. I can get in. This is a break of a variation. This is a break of a variation. I can get in right there. Or I can get in at the break of the structure. Again, because with the H1, it has a major structure as well. Remember, let's say you're using the daily structure. So now what it is, you just went down to a lower time frame, which is everything that's going on inside the daily candles. You going in, you're trying to find out on a tradable time frame, how are you going to get in, ride that bad baby down. So again, high low, higher high. So here's my major structure from this H1 perspective. Capiche? Make sense? Right? So then what I'm looking for this to be broken. Once that's broken, I can take a sell trade. Now some people, they kind of wait for it to retest here, and you could. This would be a valid entry to get in right here. or you want to wait for some kind of engulfing candle and so forth. You can actually get in like right over here, you know. What you can also do as well is to be in a more confirmed. You want to go like that, much more confirmed. You want to wait for price has come down. You want to wait for the higher low, the lower high to be formed, and it has come down. And here's your lower high right here, so you can get it over here. That's the confirm, because this move would be look like this. You see what I mean? So up here is where you would get into the trade, and then you just take it down. And you know, there's a candle by candle analysis of whether you would get out of the trade and so forth. But if you did stay in the trade for the whole leg, let's say you got in right here, and you came down here, it's 403 pips. It's a lot of pips. Put a standard on that, it's $4,000. You know, half of that is 2,000, and you know, go on and up, on and on. But that's pretty much how that works. And it's how it works if you want to go down to from a daily perspective, and you want to go down to a lower time frame as to how to get into the trade. You would get into the trade the same way you understand the principle of major market structure and variation within the structure. So it's the same thing as you notice here. I'm going to show you again. It's the same thing. You know, you have a higher low that created a higher high. There's your market structure. Okay. Now here is just a variation. You're still within it, but this is a variation. So you could have this aggressive entry. So you could have taken a sell here, and you see this big engulfing candle, which is letting you know that sellers that have definitely entered the market. And not only that, this bearish engulfing has come down and even broken its major structure level. So we are confirmed that the sellers are in the market. So it broke variation, and it has broken also major market structure from an hourly standpoint. So wait for the confirmed entry. Some people get right in after the break here. Some people kind of wait for the candle to another candle to close up under this level of resistance, and then they go ahead and get in. Whichever way you trade, it's fine. So that's that. I don't want to spend too much time on that. I want you to just take a look and go over this video over and over again. I'm also going to put up the original video from my mentor car from back in the day that I had taped. And he goes into more depth on this as well. And once you understand this, you see this, you're going to be able to trade. You're going to be able to trade whether you trade harmonics or anything. You understand what I'm saying? You'll be able to scalp. You'll be able to do anything just based off of this right here. And once you incorporate price action, which is basically understanding what the candles are telling you, each candle is telling you in chart patterns and things of that nature, you'll see that it's going to be very good. And I wanted to also show something as well. I'm going to the monk. I'm going to just bring this over here. You know how sometimes you'll see, matter of fact, let me do this. Let me stop sharing this right here. I'm going to go back to a whiteboard. Okay, so you know how let's say you're in an uptrend, right? We're going to do an uptrend. This used to happen to be all the time, right? And then you started doing this. And then all of a sudden it starts kind of consolidating. Let me just let me go back again. It starts doing this. And then it starts consolidating. And I'm not going to say, and this could be higher lows or whatever, or higher, I'm not for sure, but you know, consolidate. And then you say, well, you know, you're in, they'll be like, oh, you're in a bearish flag, right? Because this is the flag, and you know, you got this. And then all of a sudden, price comes up here, breaks out, and like, yeah, I got the breakout, and it does this. And you're like, what happened? I thought this was a bearish flag. Man, this stuff used to happen to me all the time. I'm like, wait a minute, it's the bearish flag. This is understanding the relationship of market structure, major market structure. This was never broken. Here's my market structure here. Let's make sure, let's just say this was even. No, so messed up. My drawing's not that great. This wasn't broken. It came down. Yeah, it broke out here. And all of a sudden it just went up. Why the heck did it go up? And it went up real fast. Was it news? That's the first thing that we think. It wasn't us. It was news. Or either like, maybe I didn't understand how this bearish flag works. Yeah, it was a bearish flag. I mean, it kind of did break out. It didn't do what you thought it was going to do, because what are we taught? We're taught that the same length of this would be the same length that you can trade, right? Whatever that length is here, it would be the same length that you can go ahead and catch those amount of pips. But it doesn't do that. So whenever you see some type of chart pattern that kind of goes opposite of what you know it should have done, but it kind of did it just a little bit, go back and look at your major market structure. And then you'll be able to say, now you understand why it did what it did and what was going on. Because remember, the intention of the price is bullish. And until they come down and break here, this intention now is bearish. But it comes down here and you start seeing wicks, hammers, things like that. Hammer sitting on top of support. That's letting you know, this is support, baby. We ain't going nowhere. Sellers are not in. Sellers try to come in, and they were rejected heavily. The buyer said, we're still in control. This is still our level of support. This is what we call, this is a point of reaction. This area here, all these impulse legs from the first video, remember, banks, institutions, hedge funds, they're the ones who make this move. So right here is where they made the move. So now they come back into that area. All they did was just get more liquidity here. All the retail traders, all the small people and so forth, they just got the money, gained enough liquidity, came back to the same area in which they made a move, and made the move again. That's all it was. So when you understand the relationship, understand the principle, you'll be well off. I hope that you enjoyed this video, took some nuggets out of it. I know I sure did. And if you have any questions, feel free to hit me up. Until next time, adios.